In the past few years, Tesla's A share price has soared, and as of January 21, 2022, it is almost close to $1,000, 900 cents. Naturally, the question of whether Tesla should split its shares to bring the price down to a level that most investors would find more reasonable emerges. The corporation has already split its stock. So if it's any indication, there will be another one shortly. 2022 is expected to be a significant year for Tesla, and a separation would simply confirm the many analyst predictions. Stock splits, what is it? Is it better to purchase Tesla shares prior to or following the split? In today's video, let's find out. What is a split of stocks? Companies can change how many shares are currently issued by splitting their stock. The market value and market capitalization of the company are unaffected by a split. For instance, let's say a company splits its stock 2 for 1. In that scenario, each shareholder will own twice as many shares as they did before to the split. Even so, because the share price has been cut in half, the total value of the shares remains unchanged. One of the main goals of stock splits is to momentarily reduce the price per share, which attracts smaller investors by making shares more affordable. While fractional shares can be purchased, management teams find that a stock split is a crucial tool for opening up share prices to individual investors. Splits also contribute to a decrease in the cost of derivatives. The split can certainly increase or decrease a stock's overall share price in the days, weeks, and months following the split, even when the total value of the stocks or their derivatives remain the same. If a company chooses to divide its shares, the market capitalization stays the same. Even though owners may own more shares, the split ratio reduces the value of each share. A higher number of investors is frequently attracted by this lower price per share. Share prices may rise as a result of this increased demand, raising the market capitalization as a whole after the split. However, this isn't always the case because a number of factors, including the foundations of the business, it's only split once since Tesla's IPO. Indeed, August 31, 2020, saw the split of Tesla shares. Each share that was owned at the time became 5 shares because of the 5-for-1 split. Thus, on August 31st, an investor who held 1,000 shares of Tesla stock on August 30th acquired 5,000 shares. An indication that a stock may split soon could be seen in its rising price. For instance, the price of a share of Tesla was approximately $850, then $950, and ultimately $1,200. Therefore, the price somewhat dropped after Musk announced that he would no longer be selling shares. Does this mean another split in Tesla stock is on the horizon? When Tesla stock was trading at $1,300 in the summer of 2020, its eccentric creator and CEO Elon Musk claimed that the shares were too expensive. He went on to say that shares in electric vehicles had to be available for purchase by a larger segment of the population. Shortly after, there was a 5-for-1 stock split. After a remarkable surge this year, 16 months later, Tesla stock is now trading at a comparable level. Gordon Johnson, a short seller, started rumors earlier this month that Musk might launch a second share division to cater to individual investors. When Tesla announced its 5-1 stock split on August 11, 2020, Twitter user Sawyer Merritt claimed that TSLA was trading at $1,373 prior to the split. We've climbed above $1,000 to $1,024 since the split and reached the same $1,300 mark. Let's wait and see. But we think Tesla will most likely investigate another separation of some sort. According to Neil McNeil, the creator of the 2-for-1 index, an attempt to increase Tesla's free float by lowering its share price would temper an insane market valuation that briefly fell after Musk said he would sell 10 of his shares due to tax considerations. Although Tesla has brought electric cars to the attention of the globe, McNeil, whose 30-member post-split index has returned 12.5 yearly since 1996, believes that its worth is illogical, but because of its high valuation, Tesla is not taking part. According to McNeil, this company is worth more than all other automakers put together. Its price-to-earnings ratio at about 400 is 50 times higher than that at any rival. That kind of valuation would require it to be in operation and profitable for 20 to 30 years in order to catch up. And before acting on their unreasonable exuberance and buying Tesla stock, McNeil cautions investors thinking about making a purchase to carefully evaluate these steps. As he works to create a company that everybody can invest in, David Bars feels that Musk would surely welcome the idea of another stock split, according to McNeil, founder and CEO of Exile Capital. Yet additional shares could also contribute to higher CEO compensation. However, since the split gives investors the impression that the stock is more reasonable, it might be a useful marketing strategy. Bars notes that this is merely a perspective and not reality. Nonetheless, investors are drawn to the idea of purchasing the shares at a lower cost. The employee equity purchase plan's excessive complexity is one of the reasons Tesla must separate. Tesla aims to facilitate employee ownership of stock. Still, we don't think they'll buy small chunks of the stock like some other trading platforms. For a variety of reasons, Tesla does not want the price of its shares to trade very high. GLJ Capital's Johnson made the prediction that Tesla will split in reaction to a statement on November 1st, as the company seems to just be concerned with its stock rising after last year's activity. Tesla's shares rose by 12 after the division of the previous year. Although they declined throughout the winter, they have since climbed by almost 70 this year. GLJ can maintain his $67 price objective if Tesla executes a 21 split, according to Twitter user Gary Black, who attempted to interpret Johnson's comments. An analyst Adewanda believes that Tesla's chances are rising regardless of the company's separation. He points out that the company's announcement to sell cars to Hertz AG Bieber will probably accelerate comparable orders from other global rental companies. Yeah. I was mistaken when I thought $1,000 wouldn't happen. He acknowledges the expansion of Tesla has been exponential. They have handled the shortage of chips better than their rivals. Furthermore, the stock's movement supports the value, notwithstanding the value argument made by others. And is anticipated that the new plants in Austin and Berlin would increase Tesla's stock and delivery volume even more. This is one of the reasons why a lot of people are optimistic about a stock split brought on by Tesla's price overrun. Since we collect 4,680 parameters from the cars, the Austin opening is important. Thus, all speculation over the impact of these batteries on the cars will be eliminated. They will probably be lighter, have better performance, a longer range, faster charging times, and be easier to use. The newest and greatest innovations from both Chinese and conventional automakers are always being discussed. This is the most recent and finest Tesla battery for their standard since the release of the 2170 battery prototype. Thanks to Tesla, there will be a greater technological leap than there was between the 18,650 and 2170. This is only one more explanation for the significance of the Austin opening. It's possible that all of these additional variables may raise and hold the stock price higher, leading to Tesla's announcement of a split. As a result, $2.05 billion is anticipated to represent Tesla's net profit for the fourth quarter. That comes out to $10 billion annually. The stock will profit from a fresh split, and Moyer predicts that it will hit $2,000. They have a significant, almost cult-like retail fan base. Investors will therefore welcome their separation and the stock will rise. Moyer doesn't think Tesla will face any competition, not even from Apple, which has unveiled a new electric vehicle but hasn't said when it will go on sale. In the event of another stock split, Tesla could be a great investment. Some analysts predict that Tesla will maintain a sizable market share despite competitors, because it was among the first companies to sell electric vehicles. The industry leader in electric vehicles will have to contend with both returning rivals and fresh competitors in the EV space during the next years. How might the automotive industry change if conventional manufacturers began producing electric vehicles as well? When Musk stated in a tweet in May 2020 that he thought Tesla's stock was overvalued, the stock immediately fell by 7. It seems to the average person, especially novice investors, that Musk is mysterious in the extreme when it comes to nearly everything. He has the ability to influence both current and prospective investors. People like to follow Musk's example. So if they think the stock will split in this case, that encourages investors to purchase, and buy they will. The amount that Tesla will increase after its next split is still unknown, but we predict the business will hold off on splitting until its shares reach $2,000 each. How do you feel? Please leave a comment below.